In conversation with the Principal Economic Advisor, Mr. Sanyal, appreciate you taking your time out and speaking with us today at ET. Now, you've come out with the economic survey, and one of the things that the survey talks about is the fact that the lockdown did have an impact on saving lives during this time. However, now we're in the stage where vaccine rollout is going to be very critical. We are, seeing that there's some sort of hesitancy with respect to one of the candidates that has been approved here in India. How big a downside risk do you believe vaccine hesitancy is going to be?
Well, I'm not a medical expert, so I'll go with the assessment of ICMR and other medical experts. I think their assessment, from, if you can correct me, is that the rollout has been quite positive, its reception has been quite positive, and as far as I know, vaccine hesitancy is not a major problem. I think most people who are offered the vaccine are taking it.
As far as the growth numbers are concerned, you're saying that our growth estimates are in line with that of IMF, a double-digit growth of 11% and a nominal GDP growth of 15.4%, which is going to be the highest since independence. How optimistic do you believe, in terms of these numbers we will see in terms of growth, and also the kind of impact that this will have in the budget-making exercise? Just about 2 days from now, we will see the budget also being presented. In the past, we've seen that the tax collections have been a major area where we fell short, but in terms of your nominal GDP and the kind of impact it is going to have on tax collections, what are the estimates that you would be pegging on?
Well, I think we are being very conservative, if anything. 11% GDP growth rate when the first couple of quarters are going to be on a base which was significantly negative.
Yeah.
Do your own statistics. Even a basic statistics will show you that 11% GDP growth rate on that is not something that we should be skeptical about. If anything, we will probably see something significantly above it, in my view. In fact, IMF's own assessment is higher than ours. And then, of course, an inflation rate of 4.5% is also, I don't think, particularly off the chart. So I think you just combine the two, you will see that we have come up with numbers that are more than doable. So as far as what that means as far as growth momentum is concerned, well, I think that those numbers combined with recent high frequency data suggesting that we are indeed gaining a lot of momentum, even before, by the way, certain sectors have been opened up. I mean, there are tourism, entertainment, etc., where, by the way, don't forget, they still have all kinds of restrictions in them. So presuming we can open these things up by summer, I think the growth numbers we are talking about are more than doable, and as I said, the momentum is more than in our favor.
In the economic survey, you also called for fiscal support. In fact, the survey said that there is a need for counter-cyclical fiscal policies, and you're not advocating being irresponsible while you're, making a case for counter-cyclical fiscal policies. I want to understand from you, when you're saying, in the past you've said that we will press the accelerator at the right time. Do you believe now is the time to press the accelerator? The budget is just round the corner. There will be a renewed FRBM roadmap as well, is what we're given to understand. What kind of spending are we likely to see in the next few days, and what are the areas that the government is looking to focus on?
I think, contrary to popular belief, we have already pressed the accelerator quite hard in recent months, and I think the numbers show it for themselves. So I think you need to see it since this is an area where we have come under a lot of discussion, criticism even. So I think, let me explain. During the initial phase, from April to August or thereabouts, when we had fairly tight lockdowns, and perhaps the tightest in the world for some part of that, it was simply not meaningful to begin to pump demand. A point that we made even at that point in time, but was not appreciated. What we were doing at that time was providing a cushion, making sure essential things were working. Right. So therefore, at that time, our focus was provide food, for example, for large part of the world's largest food program for 800 million people, not a trivial thing. We then did all those other things, 100% guarantee for MSME loans. Right. We provided suspension of the IBC process. What is all of this? This wasn't at that stage an attempt to reinflate the economy. We knew we couldn't. So this was all about cushioning. Once we came out of that phase into September, things began to be opened out. That is about the stage where we
Right.
also on the peaked on the COVID infection front. So therefore, in October onwards, we were in a position to begin to press the accelerator because the supply side was in a position to respond to it.
Right.
And we did. And look at what we did. We spent significant increases in capital expenditure. So let's to give you some numbers. Capital expenditure in October up 129% year on year. November 249% up year on year. December 62% up year on year. These are unprecedented increases in capital expenditure, and of course that impulse happens at the time where pent up demand from those coming out of lockdown from consumption also comes in. So you therefore see all the high frequency numbers jump up.
Right.
Not surprising, because that is precisely what we were doing. So it's first you target, make sure, and then you also time.
Does that mean that welfare expenditure is done and now the focus of the government is going to be on capital expenditure, because that is going to have a multiplier effect on the economy?
Obviously, wherever welfare is needed, and there is areas like health, we may continue to provide
Right.
support. We are not ended yet. We still have to do this massive, the world's largest vaccination program. So that still needs to be done. But yes, the capital expenditure is in some ways, when needed to provide support, is a good way of doing it. We will still be running up debts to do this. It's good to create assets against those debts. So I think the point being made is there is a case for doing counter-cyclical policy, but it should be done in a calibrated, responsible way. The word responsible is important, and it is particularly in the context where many international experts were of the opinion that what should have been done is this grand one-time stimulus. In the beginning, we have clearly shown that our strategy is better, certainly no worse.
In fact, let me also ask you about the banking sector, sir. That is one of the sectors that even IMF has highlighted in their World Economic Outlook as well. And they have said, in fact, in my conversation with the chief economist, Geeta Gopinath, she said that financial vulnerabilities is where the Indian government should focus on, and that could be one of the downside risks. In the economic survey, you've also called in for an AQR exercise. In the past, we've seen that, this was being seen, the AQR exercise was being seen as as an event that led to a large rise in NPAs, that led to a lot of fear among the bankers to give out loans as well. Why, the call again for an AQR?
First of all, nobody is asking for anybody to rush into one. Clearly, we went through an economic shock that has had some impact on assets, etc. We have quite correctly provided liquidity and other forbearance of various kinds, keeping the IBC off, not registering NPAs, etc. Quite correct, because that is part of the cushion phase. Now, at some point in time, we'll open things up. The economy, hopefully, by that time comes back with some momentum. At that time, at some point, we do need a reassessment of what the realistic position of the assets are. It is very important. And this has to be done in the context of a previous experience in this, in where perhaps we did not pay enough attention to this and kept the liquidity sort of taps on for way too long, led to overlending, and it did leave us with many of the problems we then had to face with the earlier round of AQRs. All we are saying is, do not wait for several years before you do this. I'm not saying this has to be done tomorrow, but at some reasonable judgment has to be taken at some point, not too distant future, that it is done. You find out what the situation is, and then you recapitalize, reclassify, whatever needs to be done, you do it.
In your assessment of where things are with respect to the financial sector, would you concur with the RBI's view that gross NPAs in the banking sector may rise to as much as 16.2% by September 2021?
Well, to be fair, that is the worst case scenario that you're quoting. It's not their central scenario.
It is one of the scenarios.
Well, of course, in any worst case scenario, anything could be. I mean, the
you
world
think
could end
things
also
could be
as a
much
scenario.
better?
So,
could things be much better for the banking sector?
I personally think that, first of all, what you just quoted is the worst case. So even in their forecast, the central scenario, I don't remember the number off the top of my head, it is a much, much lower number. But my view is that I think since the economy is now recovering even faster than what the RBI itself was originally envisaging, so that their own assessment will improve.
Since you're...
That is not to suggest that we shouldn't go and still do the AQR at some point, but I think...
So the Indian banking sector will not be as badly hit as...
Absolutely not. And in fact, one of the reasons you want to do the AQR is in fact to see, and I think I will be proved right, that it is actually better than people think.
Oh, absolutely. I hope you are, because the Indian banking system and you know how it functions will be very important with respect to the Indian economy as well. Having said that, you've also made a case for recapitalization of banks as well. Is that something that we can see in the near future?
And clearly you need to recapitalize them at some point in time, because as an economy we need to get on with it and lend. If we are going to talk about, you know, being a high growth country, it requires the support not just of the capital markets, which are clearly doing well, but you also need a large banking system to support that system.
The government has taken
need that to expand. Yeah.
The government has taken a very piecemeal approach with respect to the recapitalization of banks. Will we see a one-stock short, you know, capital infusion with respect to PSU
That is
banks?
a judgment that has not yet been made, but as I said, we argue that you take upfront or whatever needs to be done and do it quickly. And you know, we have improved many things. The Indian banking system today, in terms of regulation, supervision, and all kinds of other things, risk assessment, etc., is not where we were in 2010.
Right.
Yeah. So there is no question that things are much more transparent, much more responsible than they used to be. We now have the insolvency and bankruptcy system, which is clearly better at getting rid of bad assets. So this is a machinery that is far superior to what it was a decade ago. Now, given that this is the machinery you have, I think what you now need, and that AQR is basically, now you need a good map. So now that you've got a better car, you need a better map. And all we are saying is that right now things are foggy because we are still in the middle of the condition, but at some point in time, you do need to create a nice map, and then you need to, again, going back to the car analogy, press the accelerator.
One of the ideas that has also been suggested for the banking system around this budget time is that of a bad bank. You have said in the past that a BFIR kind of a model has not really worked well for the Indian banking system. What kind of a model can we expect now?
So there are many options about doing bad banks, and you know, people get hung up on one particular option, which is an option. The bad bank is an option. And even there are various kinds of bad banks. It's not like there is a kind of bad bank. Different people after the Asian crisis, there were many models tried out in East Asia. But in that case, as I said, it's not like we haven't had our own experience with bad bank. VIFR was one example. But maybe we can do it in somewhat different way, but then we need to pay attention and do it in a different way. There are other models which can be done as well using a private sector asset reconstruction kind of model, and you don't have to do one, you can have multiple of them, they can be bidding on assets independently. So there are many ways to do this. The first point being made is that whatever it is the solution you think of, that solution needs to be clearly demarcated and implemented.
Is bad bank the solution at this point of time?
Well, as I said, I'm not in a position to make that and make a judgment.
Okay, all right. On that note, sir, appreciate you taking your time out and speaking with us today at ET.
Thank you.
Thank you very much.
Thank you.